Tech was hit particularly hard in yesterday's market bashing. The country's 5 most valuable tech companies lost a combined $162 billion. Joining us with what is next for tech is Gene Munster, founder and managing partner at Loup Ventures. Good morning, Gene. Good to see you.
Hi, Melissa.
We had Apple down practically 5% in yesterday's session. Given what has gone on, do the concerns about some sort of retaliation, whether it be by the Chinese government making it more difficult for Apple to operate and manufacture there, or a Chinese boycott of Apple goods, do those concerns go up for you?
Melissa, before we jump into that, I want to take a step back and really advocate for clear, level-headed thinking here. This idle speculation has not been helpful, and it gets to your question here, in particular over the past few months. On May 5th, when things began to escalate, there was a lot of speculation, present company included, that the China business, Apple's China business, would be diminished. Simply that Chinese consumers would feel that this was a vehicle boycotting Apple products to voice their displeasure with what was going on. In fact, Apple had a record June quarter in China. And so what I just want to emphasize first as we step through the potentials here, there are a lot of moving parts to this. There are effectively 3 levels that can happen. One is tariffs can be increased, maintained, or decreased. And to specifically answer your question is, one way that we can get a pulse in terms of what the demand is going to be in China is we can actually monitor the Chinese social media. That's something that we do on a routine basis. And what we found up until 2 days ago was that the Chinese government is still advocating a positive posture towards Apple. Obviously, their online content is heavily influenced by the government. And so as it stands at this minute, I think that idle speculation is less helpful. But I am confident that that the Chinese business more broadly is going to be intact for Apple in particular.
Gene, though, I mean, I understand the good China quarter for Apple in June, but the quarters previously were impacted by the trade war. And didn't we see China sales softer than what we had expected? Isn't that more of the blueprint of maybe what we could expect from here going forward if these tensions continue?
Potentially. And what I think we saw was a combination of something related to trade. There also was an issue that Apple had in particular that started in December that effectively is Huawei is being more price competitive. This is a whole different topic. Apple in the June quarter took a more advanced, more aggressive and unprecedented approach to really stoking demand in China. And effectively what they did is they discounted the products by increasing the trade-in value of former iPhones. And so had the effect of discounting. So, Melissa, I would put the impact kind of in the December and March quarter in Apple's Chinese business as probably a quarter of that related to some of the trade-related fallout, but probably 3/4 related to more aggressive competition from Huawei.
Gene, what you call idle speculation, I call the market discounting future cash flows. Apple's down 20% since October. The S&P's by and large flat. I think there's another 20% to go if some of this nightmare becomes true for Apple. Do you not see that risk, that incremental risk for Apple with their huge sales to China and their supply chains deeply enmeshed in China?
I don't see that risk. I mean, I would point back again to the most recent data point we have is that things are not good, but they're not horrible in China. And specifically, China business in the June quarter was down 4% year over year compared to down 20% in the March quarter. Another perspective on China, it's Greater China is 17% of overall business. Mainland China is probably 13% of business. It is understandable that investors try to discount what is going to happen. I agree with that piece of it. But what I'm really advocating for is a more realistic approach to it. For example, is we can talk about the risk to the 13% in mainland China. But there's also a perspective to think about China over the next decade and to think about this is still going to be a growing economy. And Apple is really the only large tech company in the U.S. that actually has exposure to China. I mean, that ultimately could be a growth vehicle. That topic is almost forbidden to talk about just because we're so focused over the next year. That would be an example to me of clear-headed thinking, to take the negative about what's going into China today, also with the positive opportunity that Apple can grow that business over time.
Gene, let me go to the negative for a second, and just to be specific about what the true downside would be. Stay on the iPhone, manufactured in China, over 1 million Chinese making it, is the idea that we wake up one morning and the Chinese government says, these phones, even though they're manufactured here and we employ 1 million plus people, are going to be tariffed, even though they're internally made in China. We're going to charge our domestic users a tithe over a phone that's made in China. That's the real risk, is it not? Isn't that what everybody's worried about?
Yes, that is the real risk. And let's take, I want to put one risk that is not real, that gets mixed in with this, incorrectly mixed in, is this concept that the U.S. government is going to somehow tariff Apple products coming in. Apple is a U.S. domiciled company. That will not happen. But you're exactly right, is there is this risk. So then you do the game, the chess game, and the truth is several layers beneath the surface. In the chess game, the obvious gives and takes is that maybe the benefit is that could be a black eye to the U.S. if they tariff that. It also would have a negative impact, like you said, on those 1 million people. And again, I point back to what is the public posture of the Chinese government? And if we take that risk that you just framed in there and say, what's the probability that that happened, I think you would see some indications from the government about some more public frustration with Apple within mainland China. We just haven't seen that yet. So one quick thought, just to finish it, is what would the impact be if that scenario happened, albeit low probability, exceptionally low probability, but what would be the impact? I think you could see the China business go from mainland China from maybe 13 to potentially 10% or 8%, something like that. It would be a negative, again, extremely low probability, but it would not fundamentally change the trajectory of where Apple is going longer term.